Am I still in the, am I still in?
Yeah.
So what I want to do now is I want to go through the data, okay? And again, I highly recommend that you go up to the websites, Goldman and JP Morgan, and listen to the analyst conference calls, okay? And actually, they may have a conference call coming up because we're in April, right? So they're probably closing out the first quarter right now. If next week they're having, their conference calls, that would be amazing, because that's going to give you forward guidance, all right? And you're going to be able to hear how they talk. And it's amazing the way that they talk. So you'll get, and go back and listen to the last conference call. If you couldn't, if they're not coming out with the first quarter yet, go listen to the fourth quarter earnings conference call for Goldman Sachs and JP Morgan. And under their investor relations section of their website, they're going to have 10Ks and Qs, and there's going to be press releases. So there's going to be some information there on their websites. And you might have other sources of information that you want to go to. I'm just providing you base information here, but you really need to go listen to the analyst conference calls. Okay, it's amazing. And it will give you so much more perspective when you're talking and doing the presentation, because you're going to want to be using some of the same language and some of the same points that they went over in their presentation to the investors. Okay, so I'm going to go quickly the value line, and would somebody tell me there's the PE ratio, so it's 10. Okay, it might be a little high in my view for Goldman. So I wouldn't use a 12. I mean, would you use a 12 PE for Goldman? Probably not. 10's probably a little bit inflated. Maybe use a 12 just to check it out. Okay, 12, 10, 8. That's kind of what I would be using with a focus on 10. Okay, there's your multiple scenario right there. But you may want to calculate the forward-looking price and calculate your own earnings per share. I would probably just use straight earnings per share, not fully diluted earnings per share, but you might want to do fully diluted earnings per share just to be conservative. Just to, again, do another sensitivity if you want to. But again, I'm not trying to make this into rocket science. I'm just trying to make this, where you're getting the key fundamental concepts. So you can see here the revenues per share, and if you just eyeball it, you can see that, and they go back to 98, 99. So 98, 99, 2000 was the peak of the business cycle. Obviously, the revenues peaked then. And I'm just going to use top end. And then you can see it declined. 01, 02, there was the recession, right? It looked like they started to recover in 03, 4, 5, 6, 7, 8, 7, looked like the peak, right, in revenue. So what I would do is I would be calculating growth rates, of the revenue changes. And I'd be doing it for earnings per share too, and EBIT and EBITDA, so you can kind of see what the growth rate scenarios are in recovery peak periods of the business cycle. And if you think we're in recovery growth right now, we'll go back to recovery growth in the last cycle. And that'll give you a pretty good indication of what revenues could be growing at, in the future, or for this year or for next year. And you're going to be wanting to do the projection 1 year out, right? All right, so you have the peak here. It looks like it's starting to decline 08, 9, 10, 11. Looks like, so the bottom looked like it was 11. That makes sense. Then it started to improve in 12, 13, 14, 15. I'd be looking at growth rates in here, and then growing it out to 16, 17, 18, and 19, right? Because 19 is going to be your fourth year, which you're going to apply the multiple on, or the Gordon, or the perpetuity, or whatever method you're going to use to get the terminal value, and then discount it back. So that's how I kind of look at these reports. I'm looking for trending. And then Morningstar, they got, again, here's kind of your idea of the stock charts. Again, it's giving you some idea of revenue growth in here. And it even gives you annual, so you can see what it's done, over time. Operating income, dividends. So again, you can use these analysis, and again, I'm always looking for history, right? Because if I have a couple business cycles or a recent business cycle, both a decline and a trough and a recovery peak and a decline and a trough, and we're in a recovery, could go to peak. I got some technical analysis that I can use to support my fundamental, research. And this is actually this S&P report looks like it's actually a better report from a technical standpoint. So again, you can see where Goldman bottomed, and you can see the supports right here, right? Here's some supports. Here's a resistance. Looks like it broke out here. It's basically been in some kind of trading range. There's a support, resistance, resistance, resistance. So it looks like you have some confirmation right here of the resistance in the pricing. I don't see historically the stock price. Looks like that's the resistance right here, all the way across. So to be able to justify that Goldman is going to have some kind of breakout onto the upside, you're going to have to support that. Either, I don't think technical analysis is going to allow you to do it. You're probably going to have to use fundamental to do it. And if you think that it's going to trade in some kind of relative trading range, then it's a hold. Right? If you think that there is some kind of macro risk or micro risk factor that could hammer the bank, just like JP Morgan got hammered by lawsuits in the multi-billion-dollar range, that just ate right into their earnings per share, and it affected their stock price. So there might be other macro factors that you need to take into consideration if you're going to be making a forecast of what the stock price is going to be in the next 12 to 24 months. So, and you're going to be able to see a lot of that stuff when you're doing the research. JP Morgan's easy because we already know what the contingent liabilities are from the legal side, but who knows, there may be some ticking time bombs, for Goldman too. I don't know. You'll have to figure that out. And if you do, you're going to have to take that into consideration into your valuations. Okay, one more. I'm not a big fan, of this report, the one source. I think the other three are pretty good, but this gives you a nice little snapshot of the company and gives you some detail on the people, within the firm. So I think this one's pretty good just from those two are kind of value, but the rest of it's, there's better data other places, but these guys do a pretty good job of just giving kind of an overview of the firm, but who the leaders are. And boom, I put that into a slide. So why don't we stop it there.